Which of the Mag 7 is a massive buy, which is a dud? If I was working for a bank right now, which I'm not, I'm retired, I would be doing exactly this analysis. And I'm going to take you through it step by step to look at the numbers and come to those conclusions. Not financial advice. Is this going to move your needle? I think it will move your needle. But is it going to be enough to get you to financial freedom? Make 2024 the best year for you ever? No. So you're going to turn off the video? Well, you could. But really what you're going to do is you learn how to make money from your money quicker. That's why I trade. That's what I learned as a banker. I'll teach it to you for free. FelixRuns.org/webinar. I'll teach you literally how we trade one stock, 3 rules for free on Tuesday, 10 a.m. Eastern time. Why do I do it? Because I had very kind people who taught me. And I think it's a great thing to give back. I think it's a great thing to empower everybody to be actually financially free. I'm not going to bore you with my life story, but come and join me on Tuesday, FelixRuns.org/webinar. I had a lovely day today. Got up 9 o'clock, breakfast, which was served to me by my housekeeper. I went for a hike with my dog for 5 or 6 hours. I came home, had lunch, which was prepared for my cook, and I did a little bit of research on the stuff I love researching, and I'm going to share that with you here. Everybody should live that life. Seriously, it's pretty fucking good. So let's look at the numbers. Microsoft. We're starting with Microsoft because she's lovely. Look, I mean, this is just beggars believe. A business this old is growing this much. Server business up 22%. Office up 14%. Windows up 49%. Staggering stuff. Xbox up 9%. LinkedIn up 9%. Search flat. It's the only thing, but it's Bing. I mean, who the frick uses Bing, right? Revenue grew 18%. You try doing that with a business that old. Margins improved. Operating profits improved. Net profit margin improved to 35%. 35% of every dollar you give to Microsoft goes straight into Bill Gates' I was going to say Bunga Bunga Party Fund. No, I mean, we as shareholders obviously get a benefit of that too. Not just, certain islands that we shan't mention. And, look at the numbers. Profit health is glorious. Cash flow is actually pretty freaking great. Our growth health is out of this world for a business this old. So what is there not to love about Microsoft? I'm not going to run you through what they do. I suspect you have a fairly good idea. GitHub is another thing I'm very excited about with Microsoft. It's a teeny tiny part of the business, but I think it's absolutely amazing. Gross profit margins are now 70%. 70%. You know what that is? You know what that means? It's incredibly hard to compete with Microsoft. No one wants to switch from their average product. And that's because they've just sold it so freaking well. 28% is the return on invested capital. That's the number I look at as a goal, as a guide to what the stock's going to do. I'm not saying it's going to go up 28%, but if it keeps doing this, profits grow at 17% and return on invested capital is almost 30%. Explain to me how in the long run the stock is not going to go up somewhere in that range, because it'll be getting cheaper and cheaper and cheaper and cheaper. So I'm not talking short term here. I'm talking longer term. So is the stock a buy? Well, it's flying off the handle so much so that my stock chart doesn't want to load. And yeah, I just think it's a great thing to own. I just don't think you can really get away with not owning it, to be honest with you. You're buying it at all-time highs right now, but if your horizon is long enough, let me show you what happens if your horizon is long enough. You've got financials here. I'm going to skip past that. I look at a lot of numbers. We don't always need to look at all the numbers. But right now, it's trading at like 35 PE. If you hold this thing for 10 years, you will get it at 12 PE. How does that work? You're paying the price. The price is fixed. The E is profit, earnings. It should be the PP ratio, right? That would be more interesting, more kind of useful. But profits keep going up. And therefore, you'll own it at 12x, which means you're going to get like an 8% yield on this over that period. The longer you hold it, the higher the yield gets, basically. So this is long-term hold territory. What about Apple? Well, Apple came out, I actually thought, better than expected. And I tell you why. Because iPhone sales actually picked up 6% year on year. And everybody's been saying, oh my God, no one's going to buy an iPhone. Like 2 billion people use these. Do you know what that means? You got an ecosystem you can monetize. That's insanely huge. 2 billion flipping devices out there are being used, you know, like this very beaten up thing, which I pretty much only have so I can communicate with, with people who don't use WhatsApp. And okay, iPad sales are down 25%. All right. iWatch, AirPods are all down a little bit, but services 11% plus. And of course, services margins are better than phone margins because you don't have to manufacture stuff, ship it from some place in China and all that kind of stuff. So overall product sales were flat, but at $96 billion a quarter. That's quite a lot. Revenue up 2% overall, thanks to services. Profit margins have improved, operating margins improved, and net profit margins, the real profit, improved 3 percentage points. So 28% margin, that's almost as good as Microsoft. And Microsoft doesn't make a lot of hardware. So these guys at Apple are overcharging you if you buy the stuff. That's what it says. The margin is too good. You're paying, you know, through your nose for it, but go for it. I know you're in a cult and you worship the ground that, you know, Apple iPhones get broken on and that kind of thing. That's all cool for me. So yeah, I love the business. I think services are going to exceed hardware sales. Seriously. And I think that's going to happen. And I think they're going to figure that out. I think they're going to monetize this further. I think advertising is the logical next step. Look at PayPal, right? Everybody is using advertising dollars to really bring in the bacon. That's, I think, what they should be doing. Don't build a frickin' car. I mean, Profit Health A. Do I need to say any more? It's just an insanely profitable business. It's a great business. It's got a cult following. People will pay way more than they should for the phones, and they do it because it makes them feel good. People literally sleep in the rain outside a store on a New York sidewalk, which isn't the safest place to be in the world, to get their hand on the phone the first minute it comes out or any product they put out. If you got that, you don't need to really worry. You know? Nutters, yes, but still, the nutters are what you want. Return on invested capital is 52%. What? How do you even do that? Okay, a little bit of leverage, but 10% profits are going up. I say, in my view, the stock is going to go up somewhere between 10 and 52% in the long term. Scientific, right? But no, seriously, that's the way I look at it. And, you know, do you want to trade it? Yeah, sure you can. Like, we put on some trades on some of these, and we will maybe today as well. And what I'd say to you is come and learn it, because it really, how much money you make is really, really about how much money you put into the market. If you put a lot of money into the market, you're going to get, over like a 25-year period, you get a 19x on average on the S&P. You buy good stocks, you get more. But if you can put in another $100, well, you're going to get 19 times that. So why not put an extra $1,000 a month through trading, and then reinvest that into great stocks, and then that $1,000 becomes $19,000. Do you see anywhere that gives you that kind of return? I don't know why the ARM keeps doing this. It just seems to be working on its own. Right now, 28x PE. In 10 years, it'll be 14x PE at pretty miserable growth rates. There's even a minus 10% year in here. So 10% growth going forward. And I think they'll probably do quite a lot better than that, because I think their services will kick in, services will grow faster, profit margins on services will be bigger. So I actually think Apple is going to just evolve into this glorious, marvelous service business. Don't you agree? Hang on, let me ask my chief financial analyst here. What do you think about the service business? Do you think it's going to grow a lot? Very, very deep, sincere thoughts there, don't you think, from this little perma kitten? I call her my perma kitten because she's like, how old are you? I don't know. More than 10 for sure. But she acts like an absolute toddler. Never grown up. Don't grow up, children. It's not a good thing to do. And Google. Google got hammered for these earnings. Let's have a step back here. Okay, advertising grew 13%. YouTube advertising 16%. The mobile ad thing, nobody uses. No one cares that it's down 2%. Google Play up 23%. Google Cloud up 26%, actually taking market share from Microsoft's Azure. So revenue grew 13%. Margins improved 6 percentage point, 20 billion profit. Do you see the problem? Nope. Me neither, honestly. Okay, some people were hoping that search was going to be a little bit bigger. Growth, that is. Well, I still keep saying we're in a private sector recession. The government is bailing it out by overspending and curmudgeoning the data. But this is pretty good. And no, Bing isn't going to take away. Did you see the Bing growth? 0.0. So, I think it's an opportunity, quite frankly. Now, I'll show you why. Well, first of all, there's a large cat in the view here. But profit health, growth health, cash flow health, all absolutely freaking glorious. And then if you look at margins, again, return on invested capital, 25%, long-term earnings growth, 16%. So to me, the stock's going to grow somewhere between 16 and 25% in the long run. That's my sort of, banker maths there. We know banker maths. That should be a hashtag, right? What's 3 plus 3? I don't know. And you got a spreadsheet? Anybody got a spreadsheet? I've got a spreadsheet. I couldn't possibly answer that question. I used to build massive spreadsheets. That was my thing. And I haven't got data. I've only got data going forward 5 years here in terms of what analysts expect. But you buy it right now at 20x PE. You should have it at about 9x PE in 5 years. So that's pretty glorious, isn't it? Actually, very, 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 very glorious. So I like it. I like Google. I just think, what do you do all day? What do you do when you go look for information? Do you go to Google? I go to Google. Do you go to ChatGPT? Not usually, because it gives me back all this convoluted knowledge thing and it tries to re-educate me to, identify as a goat or something. So no, I don't go there first. It's just easier. Just type it into Google, right? That's what people do. What about Amazon? Well, Amazon is an interesting business because it's got a core business that makes fuck all money. And then it's got a side business, which is insanely profitable. So AWS, 24 billion, growing at 13%. And then all the kind of hard, retail growing about, 10% or something like that. So overall, and advertising, by the way, I love that. 27% advertising growth. Woohoo, advertising. Subscriptions also pretty good. That's a $10 billion business. All those Prime subscriptions we all pay for so we can get our stuff. Am I still paying for one? Actually, I think in France I'm paying for one, but not here in Hong Kong. So revenue up 14%, gross profits, margins have improved, operating margins improved. And look at the operating profit. AWS is like 7 billion of that. More than half of the profit is AWS. So why the heck would you run the online shopping business? It's a terrible business. But is it? You get all that data, you build all that platform out, and it's starting to become profitable again. And because of that, you can get in $15 billion a quarter in advertising revenue, which is like pretty much pure profit margin. And you can, and the subscription, that's another 10 billion. So there is juice in there, and they're going to get into that more and more and more. So 10 billion profit is not too bad for a pretty low margin business, 6%. I think that margin is going to keep ticking up over the next coming quarters and years as the expense on building core Amazon is going to become irrelevant, and advertising and everything else, and just having the data on absolutely freaking everybody and what you have for breakfast is going to be so freaking valuable. So return on capital is pretty poor, 7%, but profits are going up 24%. So again, that's kind of my zone, 7 to 24%. I think it's going to go up by in the medium term and per year, that is. Doesn't have to happen this year, but in the longer run. So I'm loving it. Is it super overpriced? Yeah, it's freaking expensive. 58 times PE. But again, 10 years forward, it's only 16. And that's not assuming, that's actually assuming 2 years of negative growth and 30% drop in the business, which I just don't see happening. So I actually think that number is going to be probably closer to 10x as the advertising higher margin business grows and the AWS keeps growing and all the services that are piggybacking off that are going to keep growing. So I actually think you're probably going to go from 58 PE to like 10 times PE. So far we're loving everything, aren't we? Are we loving Zuckerberg's Meta? Well, let's look at the numbers. Advertising, it's an advertising business. It is nothing but advertising. It's like a newspaper. It's just 2024. And then other is 0. So who cares? Reality Labs is $1 billion. So really, I mean, at this point, who cares? Maybe there's some future growth in there. Who knows? So we're getting 38 billion in advertising in there. That brings us to 40 billion revenue. That's a 25% growth. And you know, everybody like 2 years ago said to me, Felix, Meta is dead. Why do you own Meta? Why? It's over. No one uses Facebook anymore. Bollocks. I mean, how many people use Facebook a day? 1.1 billion. I know that includes all the bots, you know, but it's a lot of people. It's a lot of people. Profit margins went up 7 percentage points. You know how they did that? They sacked a lot of people. Very, very, very efficient at sacking people. That's Zuckerberg. Operating margins are up 20%. Net profit, a whopping 35% margin now. That's as good as Microsoft. So, yeah, we gotta love him for that, don't we? That slightly creepy Zuck. He knows how to run a business. And hopefully he's going to start spending a little bit less on R&D. He's cut that down by 4 percentage points already. And he got rid of a lot of other people. So focus more on being a freaking amazing advertising guy and just focus on that, basically. And he's going to do really well. But yeah, profit health out of this world, cash flow insane. And they're going to pay dividends. Dividends. I loathe dividends. Dividends are insanely inefficient, insanely tax inefficient. It makes no sense to pay dividends. But if you run out of things to invest in, I guess you got to pay the money out somehow. So that's what they're doing. Zuckerberg's going to get $700 million a year just in dividends. You know, he's saying, buy another bunker. Return on invested capital and earnings growth, 22%. So I think the stock's going to go up by about 22%. That's just my, I could be wrong on that. But gross profit margin is 80%. I love companies with an 80% gross profit margin. Make my tears sort of well up, really. It's just so good. Do you know how hard it is to run a business with a gross profit margin of 80%? It's pretty hard. It's really good, though. Really good. That's like my drug of choice, really, is that. So is it expensive? I don't think so. 27 times PE? Okay, 27 years of profit. Own this thing for, 6 years? And you go to 11x? Might be a little bit more. Is it going to grow at 7% in 2028? I doubt it. I think it's probably going to keep growing. So I think a 10x in sort of 6 years, probably a 5-6 times PE in 10 years is entirely possible, at which point you're getting a 20% yield on your money. So what do you need to do? You need to put more money into the market quicker, faster. How can you do that? Well, come and join me on Tuesday. I'll walk you through how I do it. felixfriends.org/webinar. We made yesterday, I traded for half an hour. So far by today, we're up, I don't know, $350 or something. It's like 1%. But it's in a day, half an hour, right? It's glorious, really. I mean, trading is just, you do it right and you do it so it takes very little time and you follow rules and you automate the whole thing. It's freaking glorious. Now, NVIDIA, and I be completely honest with you, I didn't get NVIDIA. I was like, the valuations make no sense to me. But then you look at how they're delivering, right? Data center growth, 41%. That's what it's all about. Gaming, yeah, a bit, but who cares, really? The rest is completely irrelevant. Gross profit margins are up. Operating profit margins are up. And net profit now has a 51% margin. On hardware, that's pretty hard. And I know they have a little bit of software in there and that kind of thing, but it's largely a hardware business. 51% margins. They are ripping us off so badly with their NVIDIA GPUs. It's insane. I had to buy a new one for this computer. I can't remember what it costs. I don't know, $1,200 or something US. And I had to do that because I was traveling for a couple of months. So I was working on a laptop, which had latest NVIDIA card in it. And I got used to NVIDIA Broadcast, which is what I'm using here, which keeps me in focus and makes me not look like a complete goggle-eyed freak. And I got back here and I was like, I've got a great big desktop computer. It's going to be brilliant. Like I said, the software is incompatible with your NVIDIA card. So I'm like, oh, freaking hell, I'm going to have to buy another one. So I call the IT guy and say, I need a card. What do I need? And he comes over and it's, $2,000 or something by the time you replace everything that needs to be replaced. So yeah, brilliant. They've got us by the balls. And as long as they keep growing their revenue like this, 34%, it's going to be amazing. Now, I do think there has been a lot of forward shifting of revenue from China and stuff like that. We don't need to get into. You know what I'm talking about. And the question is, can that continue at the same rate? It seems that people like Tesla want to buy every NVIDIA chip there ever was, and it seems data centers still want to go and buy a lot more. AI uses an insane amount of data, processing power, and therefore, as the smarter all the apps get, the more computing power they need, and NVIDIA so far seems to be the only one who can make a half-decent chip. AMD seems to be pretty appalling, and Intel isn't even in the race. So profit health is amazing. Growth health insane, actually. Cash flow insane. And it's looking less overpriced to what it was. So, it's one of those things. So what do we look at if we look at NVIDIA? Let me have a look. NVDA. See if there's any support or resistance we could possibly scare up by looking at optionswatch.io. I'm going to go out here into 16th of February. And where is the resistance? There is some here at 640. Can you see that green bar there? 640. There is some resistance there, so about $10 above. And then it jumps to 650 and then to 700. But it's not that much. Support sits at 600, which is that red line here. So still looks pretty bullish, doesn't it? And then on the next month's chart, no resistance to the upside whatsoever. 700 seems to be the big one. 650 and 700 seems to be kind of the big one, that sort of zone for resistance. So yeah, it just wants to go up. It wants to keep going up, which is probably very likely to happen. Now let's have a quick look at just the core numbers here, and gross profit margin is 70%. You don't see that often in hardware companies. You just don't. They're just doing something special over there. And then the return on invested capital, 45%. Profits growing at 35%, which would imply growth rate of somewhere in that zone in terms of share price, which is just hard to kind of wrap your head around, really. And if we look at, let's jump past the financials here. If we look at very consistent earnings, and then we have valuations. So how insane are they right now? 51x right now, on the basis of what analysts expect, which basically are saying after 2025, this thing is going to grow at a slow rate of 18, 11, 17, 8, 16, 16, minus 18 and 10%. So pretty low ball numbers. Hold this thing for 10 years, you get to a 15x, which is like, 7% yield, which is a reasonable place to be. So if they outperform a little and maybe don't have that nasty year in here, you might actually get to an 8 or 10% yield, which is a fantastic place to be. So yeah, it's not looking at as expensive as we think, as long as they keep growing this year and next year at these pretty high rates. It might outperform. Now, what about Tesla? What about Tesla? Margins decreasing, all that stuff. Is it all true? Has Elon lost his touch? Well, let's look at the numbers. Auto sales up 2%. Not exciting, is it? Regulatory credits, who cares? Leasing is down 17%. Energy is up 10%, but it's tiny. Services, that's where the money is in car companies, usually services, up 27% because you've got all these cars out there, you've got to service them. And revenue up overall 3%, which is, not exciting, is it? Profit margin is down. That's bad. Operating profit margin is down, but net profit margin is actually up. How do they manage that? Well, you got Papa Biden to thank for that. Tax benefits, $5.8 billion. Without that, it would have been a pretty bleak year. What do I think of that? It reminds me of Amazon. Amazon was run in a way that they couldn't give a hoot about shareholders for years and years and years, just investing in a very low margin business. Nobody got it, and now we're starting to get it. To me, Tesla is the same. If everybody drives a frickin' Tesla, they get everybody's data, they're the operating platform that can monetize that in ways you can't even imagine yet. And then there's robots, and there's self-driving, and all that stuff. So I think they're following down that route, and that's what you get with founder-led businesses. They just go down a path of longer-term vision versus make money today to please the nutters on Wall Street, those kind of guys. So I like it. Is it a buy opportunity? Well, profit, health, and cash flow is good. Let's have a look where the support sits, where we might want to jump in on this. Of course, not financial advice, just an old banker sharing his thoughts. There we go. So if we look at the slightly longer term chart, we did drop below the October lows here. And right now it looks like we might be trending up again here a little bit, right? So we found some footing down here at 180. And if you look at the stock chart at 185, you actually have support. And then at 187, you have resistance. And that gets worse as we go up to 200. So going up isn't actually that easy because there are a ton of call options there. We go out 2 weeks, the resistance kicks in at 200, really. So 200, I think, is the, oops, I wanted a pen. 200 to me looks like resistance. You got to break through that. Not super, super easy. And support basically sits around 185 down here. So between 185 to 200 is where I see this at the moment, unless you can think of some sort of catalyst. I don't know what that would be right now. I can't really think of one. So that's sort of where I see it. So if it's at the lower end of that range, so I would probably say it's an interesting place to start getting into it. Is it, if you're not, is it super overpriced? Let's have a look at that valuation multiple for a second here. And right now it's trading at 58x, which is the same as NVIDIA, I thought. And you hold this thing for 10 years with average growth rates, nothing particularly fancy, we would get to 10x, and that would give you a 10% yield, which is a pretty good place to be, because then wait another 5 years or so, you probably get to 15, 20%, 30% yields. So if you've got a really long-term horizon, I think it'd be hard to really be wrong with this. But, you know, as usual, just the opinion of an old banker here. But seriously, if there's only one thing you're going to do, you got to make more money. So you can put more money into these great stocks so that they can compound over time and you can get that, you know, 19x return over the long term. That's what gets you there. So I trade so that I can put serious numbers, 5-6 figures into the market every week. And that's how I get to my real financial freedom, where I can do whatever the frick I like and I can spend the day hiking with a lovely Winston. So come and join me, felixfriends.org/webinar. I'll walk you through it. Thank you for watching. If you enjoyed the video, you know what to do. Cheers.